Hello traders and welcome to another video review. Today is Friday, October 29th of 2021. Let's take a look at the Forex calendar. Some data had been released already during the Tokyo session. As you can see, plenty of data from the Japan had been released. National CPI, unemployment rate, industrial production, all of this data don't have too much impact on the markets. However, they are quite interesting for all of you who trade the Japanese yen. As you can see, national CPI is worse than expected, 0.1% versus 0.4 forecast and 0.3 last reading, so there's no inflationary pressure. Unemployment rate at the same level, 2.8%. Industrial production deteriorates further to minus 5.4% versus minus 2.8%, and it's even worse than last reading of minus 3.6%. From the other countries, we got the retail sales data from Australia. As you can see, they beat the expectations of 0.4%. The actual reading is 1.3%. We got the producer price index and private sector credit. The consumer confidence in Japan is dropping to the level of 39.2, which is worse than expected 40.4, and slightly bigger than expected 37.8 points. During the London session, we have a data from France in form of the GDP, 3% for the third quarter, better than expected and better than the last reading. We got the consumer spending. Moreover, we are waiting for data from Germany, retail sales, and retail sales from Switzerland. Moreover, we got the consumer KOF economic barometer from Switzerland as well. Little bit better than expected, 110.7 points versus the 107.8, but still was unexpected 111 points. GDP from Spain, as you can see, it doesn't beat the expectations. 2% quarter to quarter versus 2.9% expected, 1.1% the last reading, so it's better than last reading but worse than expected. GDP from Germany is being expected here. The market participants expect the GDP to beat the expectations of 2.2%, last reading 1.6%. Money supply data from the UK is scheduled for release at 10:30. Consumer price index and revised GDP data from the Eurozone scheduled for release 11 o'clock. As you can see, GDP is scheduled to slightly drop from 2.2% for the third quarter to 2.1% for the third quarter, and the consumer price index is expected to increase from 3.4% to 3.7%, which means the Eurozone is facing inflationary pressure. So that's the pressure for the ECB to increase the interest rate as well. Gross domestic product, of course, another country, the Italy, and at 2:30 there's a gross domestic product data release from the Canada. That's a huge increase in gross domestic product from minus 0.1 to 0.7%. And of course, we have plenty of data from the US. At 2:30 there is scheduled for this PCE core, personal spending, personal income, and employment cost. And later during the day we have a Chicago Purchasing Managers Index, Michigan Consumer Sentiment Index, University of Michigan inflation expectations, at the end of the day at 7 o'clock we got Barker Hughes US recount for all of you crude oil traders. So let's start maybe with the crude oil, because we know what is going on with the crude oil already, how this market is coping. Well, we are still trading inside of the channel, and for the bulls this is something good. But recently, as after the pinwheel candle had been made at the level of $85.39 per barrel, we got the down move here, another down move, but this time the spin bar has a the lower shadow. The low was made at 80.60 cents, and we are still trading inside of this channel. The technical support is seen at 79.45. We almost get there. It's like $1 less, and we are on the on the technical support. But if we hit this support, that would mean that this last correction is the bigger correction during the whole move up since 62.34, and that means this might be some sort of the corrective cycle starting. So please keep an eye on the crude oil. Plenty of data from Japan. Let's take a look then how the Japanese yen is doing, what is going on there. The Japanese yen is doing the corrective cycle in wave 4. We expect this market to hit the level of 113.21 pips, and this is 38% of the Fibonacci retracement. It looks like we have the wave A, wave B, and right now we are making wave C in the wave 4. So in case of a correction, it looks pretty much completed. Of course, the low was made 113.27. This is 113.21. That's 6 pips miss of the 38% of the Fibonacci retracement, but we will see whether the bears want to be very, very peculiar about it and then want to hit this level, and maybe, just maybe, they might go even lower towards 112.76 as well. That's nothing wrong with this. Please remember that the discount is invalidated when the level of 112.09 is clearly violated. So plenty of data from the Eurozone. So let's take a look what is euro dollar doing. As you can see, finally we have a breakout. We have a breakout above 1.1662, big green candle up. That means this will be now technical support, nearest technical support 1.1662. We are testing it already. Then we might bounce a little bit higher. 1.1703 is the next target. Then very interesting level 1.1752, which is just below the upper channel line. Please notice the fact that the market is still moving lower. The euro dollar is still moving lower. So this is the descending channel into the 50% of the Fibonacci retracement of the whole move up. So if that is a nice breakout out of the channel, then of course we might say that there is something going on here on the euro dollar, but that would also mean the US dollar index is going lower, and this is what is happening here on the US dollar index. We have another wave to the downside made towards the level of 93.25. 50% of the Fibonacci retracement of the last wave up is 93.22. That's a 3 pips miss of the 50% retracement. So that's a lot, to be honest. Let me just remove some levels from the Fibonacci retracement. There you go. Now it's more clear. Of course, we can go as low as 61%. Which is at 92.92. There's nothing wrong with this, but please remember this will be kind of a deep retracement, and we are back inside the channel, and we might of course get out of the channel, fell out of the channel, because I mean this gray channel, of course, because this is very, very susceptible level. The momentum is already below level over 50. We are going lower towards the level of 40. Sorry, now it's 33. Now it's 43, excuse me. And that means this is negative momentum. This is pretty much negative momentum. Bears are in charge of the US dollar index now. So we should see more of the pairs across the board going higher, especially those related to the US dollar, like euro dollar, like cable, like US dollar to Japanese yen. It's supposed to go down. Okay, so we are correcting this last move up. So far, only 3 waves made here: wave A, wave B, wave C. Let me put it on the screen. Where is my? There you go. ABC correction, right? So we got the wave A, we got the wave B, we are waiting for the wave C to complete. We will just change the cycle level. There you go. Wave C should complete here, and then a bounce. If there is no bounce, that means this is the top and we are going lower, especially if we are out of the channel. So last but not least, what is going on cryptocurrencies? Bitcoin, how are you? How are you doing, Mr. Bitcoin? What do we have here? We hit the possible nice retracement zone and the market geometry level as well. Yesterday we had a nice bounce, but the level of 62,517 had capped the rally higher. So we got wave A, wave B, possible wave C done, but I think as long as the market trades below 62,517, the odds for another wave to the downside are still high. So please keep an eye on the Bitcoin, because we might go lower soon in order to hit the zone. Let me just put it here. The zone between the levels of 56,880 and 55,900. Okay, that's the zone for the market to bounce higher in wave after the wave 4 is completed, terminated, and then of course wave 5 is now in progression. So this is the measure, at least here. So well, we will see how that will be in the future. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.